Hey everyone, Jeremy here with another video, and today we are going to be talking about the top 5 mistakes that new and seasoned crypto investors make. But before we get to that, if you want to follow along my journey as I build wealth for my family, then subscribe to the channel, hit the bell icon so you don't miss a thing. And remember, none of this is intended to be financial advice. I am merely a guy sitting in front of a computer talking to a camera, but let's get to it. Alright, so today we are going to be talking about the top 5 mistakes that crypto investors make. And we'll start from the top and work our way down to what I think is probably the biggest mistake that crypto investors make. Number 5 is buying hype coins. You can go and you see it, I'm sure, on Facebook forums, on Reddit, all over the place, Elon Musk even, pushing these hype coins that really have no utility whatsoever. And what happens is you get these people, and here, these are the kind of things that I'm talking about. So here, you've got Dogecoin. If you remember Dogecoin, it was hyped a lot a few months ago. Elon Musk pushed it, and it went from like 5 cents all the way up to almost 50 cents, and then now it's back down to 23 cents. Now, I say that a mistake is buying hype coins mainly because people generally, especially new crypto investors, they buy in way too late. So the people that were pushing this one especially, likely bought in at under a penny. And then it gets hyped up to 5, 8 cents. People start buying, then it goes up to 10 or 12 or 20. And then by the time generally people buy into these hype coins, they usually buy in at the top. They're at like 40, 50 cents. They're buying Dogecoin, which is way too high for a coin that really has no utility in my view. And then it falls down, and now they've lost all of their money. This is another one that's going on right now, is Shiba. Look at the price of this. But people are buying it, and what will happen is the price will go up, and then people will buy in late, and then it eventually, people that bought in early will sell out, take their profits, and the price will drop. This is the new one that's happening right now, is Baby Dogecoin. Somebody put this one out, and then now it's getting hyped. Look at this. This is what you can see what happens. Just cruising along right here, and then it starts getting hyped. What happens? It goes up to way fractions of a penny, but an $88 million volume, and now it's dropped back down to 100,000. So you can see likely somebody bought right here, and then the price tanked and they lost all their money. So number 5, buying hype coins. The number 4 mistake that crypto investors make is having unreal expectations for price gains. And I know you've seen it, these people on there, when Lambo, when am I gonna get my Lambo? I invested $500, and when am I gonna get my Lambo? And a lot of these sort of tie into that whole buying hype coins. These people that just buy into something expecting the price to go through the roof in a short period of time. If you've watched this channel for any length of time, you know that I only buy cryptos that have utility and have long-term potential. I am not looking for short-term gains. I am purchasing things that I truly believe in and think that in the long term have staying power and will have the ability to rise. And that ties into our number 3 mistake that crypto investors make, and that is failing to do due diligence. And when I say due diligence, I'm talking about looking at the crypto, looking at the team behind them, looking at their plan and their utility, what they're trying to do with it, and then also understanding what market cap is. And so when we're talking about doing due diligence on any of these cryptos, one of the things that you have to look at is market cap. In fact, I want to pull up one more. We've talked about veracity before on this channel, but one of the things that you have to understand whenever you're looking at crypto and where prices might go is looking at the market cap. So for instance, Veracity has a circulating supply of almost 4 billion tokens. A market cap, here you go, of 48 million. So I did a video on market cap. I will link it up here somewhere. You can go check out that video if you want to learn more about market cap. But market cap is important when you're talking about what a cryptocurrency will do. For instance, here's Baby Dogecoin, which has this, you can see the price here is less than, I don't even know what that number is, tiny. But look at the circulating supply, 50 What is that? 50 million billion. 50 million billion. I don't even know what that number is. Here you go. That's beyond trillion, I think. And so when you look at the circulating supply and the max supply of what these coins are, it would be impossible for this coin to go to $1. Here's the other thing to look at. So look at Cardano. You have a $45 billion market cap. There's 31, almost 32 billion Cardano ADA circulating, with a max total supply of 45 billion. And so the reality of Cardano going to even $50 is extremely unrealistic. What would that be? 32, I don't even want to do the math. It's basically would put it at the highest market cap of probably even higher than the entire New York Stock Exchange if Cardano were to go to $50. Now, when I say due diligence, it's important to do due diligence because there are some tokens that have a deflationary function built into them. So for instance, our beloved THETA and T-Fuel, here you can see that there is a $5 billion circulating, or I'm sorry, 5 billion token circulating supply, 5.3. Now, we know that there's inflation built into T-Fuel because of THETA staking and T-Fuel staking. But as Mitch Liu mentioned on the last live stream or Ask Me Anything, because of how they're implementing transaction fees and token burning, there likely will eventually be some deflation built into this. But I say all that to say, if you're going to purchase a token, any of these cryptocurrencies, do your due diligence, look at the market cap, see how many tokens are in circulation, look at what they're aiming to do. You can go here and read more on CoinMarketCap, and they will give you an idea of what the Veracity token is and what their mission is. Same thing with all of these, and then go to their websites, analyze it. See if you're actually purchasing a true token that has utility, and if not, I might steer clear of it. So the number 2 mistake that I think crypto investors make, and especially long-term crypto holders, which is again what I am, I don't day trade. The tokens that I purchase, I plan to purchase for a significant amount of time. So the number 2 mistake I see crypto investors make is leaving all of their tokens on an exchange. It could be Binance, it could be Kraken, it could be Gate.io, any of these crypto exchanges. When you leave your tokens on there, you do not have control and possession of those tokens. You don't know the keys to those wallets. I believe, this is just a personal speculation, but I believe that many of those crypto exchanges are actually functioning on derivatives. So whatever coins they say they have, I don't believe that they have all of those. Sort of like fractional reserve banking, I believe that is sort of what they are doing. And you'll notice that a lot of times when you see the price of tokens spike, all of a sudden you have difficulty removing those tokens off of their exchange. They'll let you buy and sell them all day long on their exchange, but if you want to pull them off and put them in your own wallet, all of a sudden you have some issues when the prices are spiking. And personally, I believe that is because they are having to cover their short position on a lot of those coins. If you're planning on holding them long term, get them off, put them into a wallet like Exodus or Atomic Wallet, or put them even better into a hardware wallet like Ledger or Trezor, and I will put links in the description for those hardware wallets below. Go check them out. So now it's time for the number 1 mistake that I see crypto investors make, and that is using funds that they are unable or unwilling to lose. When you are investing in anything, whether that is real estate, silver, gold, stocks, you should not be investing with grocery money, with your mortgage money, with money that you're going to need in a month or 2 months. I do not believe in using leveraged debt to invest. I believe that if you're going to invest in anything, that it should be money that cash, not money, cash, that you have in your possession that is above and beyond anything that you need for expenses, that you are able to lose. Don't invest in anything with money that you can't lose. I seen posts on Facebook not long ago where somebody had invested in a crypto. I can't remember exactly which one it was. And the price went down. And they were freaking out. They didn't know what to do. That money they needed to make their car payment next month, and they didn't know if they should sell or not. Well, they've already lost half of their investment because the price dropped. And so when they go to pull that off, they're not going to have enough to make their car payment anyway. It sort of ties into that number 5 and number 4 reasons, buying hype coins and expecting unrealistic gains in a short period of time. When you purchase cryptocurrency with money that you are able and willing to lose, then it doesn't matter if the price goes down because you're purchasing for the long term. If the price goes down, you can just hold and wait for the price to come up. If you look at this, the cycles of cryptocurrency, they are always going up and down and up and down. And if we look at Bitcoin and all of the dips that's done, even back into 2018 with the big dip, it has always come back, and there's no reason to expect that they won't come back again. All right, so if you stuck through it all the way to the end here, I want to throw in a bonus mistake that I see crypto investors make. So that's purchasing tokens or crypto and not having a plan for when you are going to get out. And that doesn't mean that you're going to get out of everything, but you should have a plan for locking in some of those profits and those gains. If you're just purchasing tokens and you're planning on holding them for years without ever pulling out any of the profit, that's not a good strategy either. As prices go up, you should have some sort of strategy to get out your initial investment, whether that means that whenever it goes up 100% and you can pull out half of it and have the other ones basically paid for and free, that's one strategy. Could be pulling out once it goes up a certain 100, 200, 400, 500%, whatever it might be. You should always have a plan on how to lock in some of those gains. If you like this video, please like it. Consider joining the Patreon, supporting the channel, and gaining access to some more valuable content. I've got another video starting right over here. Go check that one out, and I'll see you over there.